We're going to start off with C2 and C3, considering a resolution approving 23-02, entering into an agreement between the town of Westlake and Government Securities Capitals for financial consulting and take appropriate action. Ted, you want to come up? Might as well all come up. It's just the next resolution's 23-03.
Thank you, Mayor. I'm Ted Christensen. I'm the president of Government Capital Securities Corporation. It's Rudy Segura from McCall Parkhurst. They're the bond counsel firm in Dallas. My associate, David Faulty, our firm. David's a retired superintendent from South Lake Carroll, long time superintendent there. So works with our team, Westlake, both for city issues and any very, very helpful. So y'all have our contracts and talk to most of you ahead of this meeting. Happy to answer any questions. Like to discuss, we're happy to do so.
Sure. And you guys used to be our bond counsel, right?
Yes, sir.
Oh, for 18 years? Wow. We missed you. Okay. You guys, any questions for these guys? And your fees are contingent fees, right?
Correct.
So if we were to use you in the future, that's when you'd be paid.
We get paid when the bonds are issued. There are a couple of annual type fees if you do continuing disclosure. If you elect to use us to do that, that's in our contract. That's where you file your annual notices with the SRB EMA website. I don't know if your current FA is charging for that. I don't know. So it's not a significant amount. It's like $17 the annual. The other one would be arbitrage rebate calculations. That's become a big issue since interest rates have moved up. Most people borrowed at much lower rates, and according to the IRS and ahead of that with doing the arbitrage rebate reporting and calculations, it's really important to protect you. Overall, our job is to protect the city. Our fiduciary responsibility is to the town of Westlake, not to anybody else. So if you elect to do that, I have a specialist on our staff that's all she does. She's an attorney, CPA by background, and she does all the arbitrage rebate calculations. Clients nationally.
And is the just to clarify, the ARB rebate, that's just determining the amount of proceeds from bond issuances that's being invested in.
Correct. So it's really critical for anybody that borrowed in 2020, 2021. Rates during COVID were so low, they may have borrowed at 1.5% and 2%. They could, if they still have bond proceeds in the bank today, they're earning 4% plus. So that can become an issue to the IRS. They don't want to subsidize you tax exempt interest rates. You're going to then turn around and invest it and make more money than that. That's why they do that. So,
but it's allowable, but just disclosable.
Well, yeah.
Right.
Yeah.
It's taxed.
Send it back. So there are certain exclusions. You're required to spend 5% within the first 6 months, for instance. Well, believe it or not, there are borrowers that borrowed anticipating higher rates in the future. That borrowed $20 or $30 million that's still sitting in their bank account. So I don't think that's an issue here, but we have clients that have done that, and we're trying to make them understand the IRS. If you work with them and you do the reporting and you're trying to do the right thing, apparently they're very easy to work with. Find out that you did not do that, that's an issue, and they're not so easy. So again, our job is to not let anything like that ever happen to the town. So I'm going to make sure you have that and aware of those options to kind of report.
And Ted, some of us know this, but where do you live?
I live in Westlake, so.
that might make a headline, then you would get audited, in which case we have 3 attorneys that are specifically admitted to practice in front of the IRS that do our audit practice. So separate hourly engagement in the unlikely event you ever got audited.
Oh, excellent. And then we obviously have a school, and you guys have the formal Carroll ISD. Are you superintendent or CFO?
I was a superintendent for Carroll ISD.
You're
I
a
was
superintendent?
CFO in a prior district and have a securities license.
Oh, so you have pretty extensive school background that maybe we can tap into in the future? That would be useful.
School superintendent for 18 years and in the business for about 30.
Oh, that's useful information.
And do some superintendent searches on the side if you're
Yeah,
needing contacts. I can help with contacts.
sure.
Other than just the mechanics of issuing the debt itself, to which you've alluded to as the contingency upon which you're paid, is it correct you're also providing peripheral advice, so debt capacity,
Right.
existing bonds, just it's a whole...
Right. It's a holistic deal. Really, any kind of questions that you have, group or individually, regarding any kind of financial type issue, we're happy to entertain it. And I will upfront say I'm not a lawyer. I won't practice law. If there's a legal issue, I would get with Rudy to discuss it. But any kind of financial stuff, we do all that just as an ongoing part of the relationship. We don't expect to be paid. We're not going to bill you. Again, as a resident of Westlake, I have no incentive to do anything that would cost me as a taxpayer any extra money. So that's always in the forefront of my mind.
Good answer.
But Ted, kind of how we found you was you had a challenge with the cell tower position
Right.
and stuff. And
Right.
so then all of a sudden we realized what you did for a living.
Right.
And that's kind of how all this happened, right?
Right, that's right. I was telling these guys that at lunch. So
And were you surprised to hear that we were 50 or 47 million in debt?
I was a little surprised. I looked at the MAC report, which I gave Amy to give to each one of you. I think, David, we talked on the phone about that. MAC, Municipal Advisory Council of Texas, is an organization. They are the central repository for all information regarding debt held by any kind of governmental entity in Texas. They update those reports every few years. I contacted them Friday, and they had it updated by noon today. So I printed a copy for each of you. There's all kinds of factoids in there. They're occasionally not accurate, maybe with some of the tax numbers or assessed values, but they're pretty darn accurate. That stuff is for sure accurate. Pull it right from the debt issue, final official statement or it's out there. So I was a little surprised that our debt load was that high, and it sounds like that last deal, going back to 2000, was not what the town expected.
Do you think our debt load per citizen is very high? I'm not trying to put words in your mouth, but what do you think?
I think based on our assessed values, it's not high.
Okay.
You have the kind of assessed values. I see debt loads like that with cities that have a assessed value of $200 million. So 10 times that. So I would say it's not high on a assessed value basis. It's a little harder to calculate on a per capita basis because we are not a heavily populated town vis-a-vis our assessed values. So, I'm a big believer is you don't issue debt just for the sake of issuing debt or to keep a tax rate at a certain level. When you need it, though, you should. If you do it well, it shouldn't impact the taxpayer.
If we get into a position again where we have to refinance existing bond falling due, like we were last year, which brought on, as we all discussed, about a third of the debt load that the town has, would you be in a position to help negotiate and advise on what the good course of action would be?
Yes, that's 100% with what we do. We do a ton of refundings. We do an analysis. Is it better to do a private placement directly negotiated with a bank or a bid out to a bunch of banks, or is it proper to do a public sale with underwriters that are out selling to the whole investment community? Really is determined by the term that you're looking for. If you're a AAA rated credit, you're almost always going to be better off selling publicly sold bonds via underwriting because there's huge demand for this kind of credit, these kind of bonds.
What happens to your contract if a significant period of time goes by and we are not in a position to actually issue?
The contract is such that it's automatically renewing, but terminatable, it's a word, with 30 days notice. So bottom line is, if you don't want me to be your FA, I don't want to be.
So it's a low risk appointment.
Yeah, there is no risk in that regard. Rudy would say the same thing, that if we serve at your pleasure is the bottom line. If you want to move on or make a change, that's fine. You know, in 10 years, if there's a different council up here and they want to go a different direction, they can do that too.
Our law firm just happened to be 104 years old, and so we have a lot of clients. We were one of the first bond counsel firms in Texas. We have a lot of clients that we've had for 80 or 90 years. And so in between engagements, they call us with all kinds of questions, use of unspent proceeds, arbitrage questions, and we do 99% of all that free of charge. We just get paid when, as, and if the town would borrow money.
There's a saying, if we help you build the bridge, we'd just like to walk across it with you.
Hi, Ted. Thank you so much for joining our. Could you just give us a little bit of a background of your company and any other municipalities that you're helping?
Yeah,
currently?
we actually are two companies. The first one was founded in 1992 here in Southlake. They focus as Government Capital Corporation. They focus on financings of not bonds, i.e. fire trucks and buses, kind of form of indebtedness that's not bond related. They're national in scope. We do similar size or similar amounts of deals. I tend to do fewer deals of a bigger size than they do $200,000 and $300,000 financings for buses, or police cars, or fire trucks. And ours tend to be obviously a lot bigger when you do bonds. So, securities company was founded in 1999. I joined in 2003. Initially, we were fairly small. They founded it just to help with some of their leasing clients that wanted to do bonds. We've grown since then every year, several hundred million of debt a year. Got a staff of 10 or 11 full-time staffers on my side, same on the other side, that work on our deals. You're never more than a few hours away from getting a return phone call or a visit from David or somebody else on my staff.
Any other towns or cities also that you're doing?
We do a ton of cities. I don't have a lot of personal clients because as the president of the company, I have guys like David doing most of them around the state. I'd say we have at least 40 other city-type clients. You'll never find me working city of Dallas or city of Fort Worth. I don't do big, giant cities like that. I do city of Sanger. We do Boyd, Bowie, Olney. I mean, a bunch of those. We're doing Leonard and Trenton up. So we've got a lot of similar-sized towns, similar-sized population. This is our kind of city, honestly.
You've been here. You are a resident of Westlake.
Yes, I moved in, built our house, and moved in 2019. Had the lot for that. Before that, I lived in Southlake. So I've been in the area for almost 30 years. Very familiar with the local.
Thank you.
Any other questions? Any other issues?
Well done.
All right, thank you so much.
Thank you, guys.
Thank you.
Can I get a motion to approve Resolution 23-02, considering approving Resolution 2302, entering agreement with Town of Westlake and Government Capital Securities for financial consulting services? Any other first?
I'll make a motion.
All right. All in favor? Aye. Motion carries. All right. Then, considering approval of Resolution 23-03, approving a contingency fee legal contract for legal services with McCall, Parkers, and Horton LLP. Can I get a motion to approve?
I'll make a motion.
Can I get a second?
Second.
All in favor?
Aye.
Motion carries. All right. Let's go on to 23-01, considering approving Resolution 2301, approving the fiscal year 21-22 annual audit report with Brooke Watson's PLLC, and take appropriate action.
Good afternoon. Get this right. Good afternoon. My name is Louis Breedlove. I'm with Brooks Watson. I've had the pleasure of working with the Westlake Academy during the 2022 fiscal year audit. I do want to, before I get started, wanted to just kind of make sure that I address this, the timing of the audit. So ideally, we'd be doing this much sooner than we are doing it today. We had, as you may all know, some personnel changes, some many delays that caused a late start to the audit. As the Academy's new auditors, we did a number of procedures that require a lot more in-depth testing to the first year, just make sure that we're very familiar with the Academy procedures and things of that nature. So we got it down to the very end from a timing perspective on when we could get this done. I'm happy to say that we were able to accomplish that, but it is ideally this would be presented to you much sooner, and will be. But I wanted to make sure that.
Liz, I just want to ask a question on that topic. So my understanding is that your group's been appointed for a 3-year initial contract. Is that right?
Yes, sir.
Okay. So this being the first year you've undertaken the audit, I think I had mentioned to you very briefly before, we faced a very similar situation this past May. That was our first exposure to municipal audit, and we were given next to no notice in order to review and approve the audit in a public meeting. As you're aware, and I don't think you've explicitly said so, we've had less than 24 hours to review this particular audit. I think given this is your first audit of a 3-year contract, can you just talk a little bit more about the underlying conditions which led to the delay, and what are our best expectations in future periods in terms of what we as a council can expect?
Yeah, absolutely. So before we kick off the audit, we always, in our planning process, we set out a timeline of when, and as you know, we're engaged to complete the audit for the Academy as well as the town. So we outlined do that, and the Academy to be completed. I can't remember the exact date, but started October timeframe to start field work. We did some preliminary testing at that time, but was significantly delayed due to personnel changes that resulted in just timing of when we needed the items per our scheduled dates to be able to start field work.
Which personnel in particular? So in October, which personnel left that was a delay?
And now, as far as when they left, there was change in the finance director position that in the. Is that okay? Okay. There were. I never met the previous finance director before Amber took over that role. So at that time, in her transition into that role, she encountered many things with that role that delayed her being able to get the information together to be able to get that timely.
So you're saying the journal entries were behind from the start?
Perhaps journal entries behind. There was definitely some journal entries being made up to the date that we got the information. So I know they were having to catch up on a number of items, journal entries. And
so the fiscal year ended September 1st? Starts, right? The school?
Yes, sir.
All right. And then, so September 1st, we were still behind on journal entries.
That's correct.
All right.
Are we caught up now?
For last year, but we're still a little bit behind for this current year.
What's our plan to get that caught up?
We're working with extra staffing, and then we're in the process of trying to interview for the new CFO to get that up and running.
Yeah, and so with that, resulted. I mean, we can't start an audit until we have information, unfortunately. So once that data was provided, we were able to. We had to shift some scheduling around just due to our planned timeline being unable to fit that. So that resulted in just the timing of being able to get that information. As soon as we got it, we started working on it. And I know there was a number of year-end closeout entries that also needed to be made after them getting caught up on the year-end process, as well as just the day-to-day activity that they're having to still complete. So from a staffing standpoint, I know that they were putting in quite a bit of time to get it there, and I know they were working hard to get it to us in a timely manner, but it was just delayed. And so as far as it was about early to mid-December when we got final numbers, and so we've turned it around pretty quickly. Given that, ideally we would start working in October, be able to get this to you guys at least a month ahead of where we're at today, and also give you ample amount of time to review the report to be able to make sure that you're fully comfortable with every word in here. And we do want to ensure that we do that. And it's unfortunate that we were unable to do that this time.
And you have a slide deck to go
I
through?
do, yes, sir.
I'm sorry, can I ask another question on this? The version that we now have, is that final?
I don't anticipate any changes right now. I'm having it reviewed.
Okay. Technically draft.
Technically, it's a draft. I did put finishing touches on it yesterday, which is why you just received it. And so internally, we have 2 layers of review. So upon completion, it's gone through review, initial review, and then it will go through 2 more layers of review and a quality control review, their second layer. So that is why, until at that point it has been reviewed, we are unable to, as an internal policy, unable to sign it as a signed opinion letter. But otherwise, I don't anticipate any changes. I know it's also gone through, the finance team here has also gone through it to identify anything that they had questions about. So I think there's a couple formatting items that were identified, like lines and things of that nature, some little tweaks that will for sure be implemented as the final, but otherwise don't anticipate any change.
Can you help me understand the process? So we finalize the audit, gets approved. We talk about we want a longer time frame next time audit. When is this due, and then where does it go? What's the process?
So the TA is the upload is required by the end of this week.
Friday.
Saturday is the technical due date, but Friday is the planned upload date by that time. It is open. It's a 24 hours open portal, but generally you don't want to wait till very, very last second to upload.
Thank you.
But so that's the timeline on it.
But if it's not signed and it's still being reviewed, can we theoretically approve it today?
So, yeah, we don't anticipate any changes. If for some reason other than the noted formatting items that I can, some lines and different things like that, a couple items like that we identified earlier today when we were chatting, hopefully that will be it. But would certainly inform you as soon as anything potentially.
I'm kind of a bottom line up front.
Yeah.
On the outside of the report itself, on the actual audit, is there any findings that we need to note right now?
None, and I'll definitely be highlighting that as part of the presentation. But I wanted to make sure generally I don't give a preamble to the presentation. I did want to, just the circumstances to timing of this, I want to make sure I communicated out the gate, just because I'm sure every one of you is concerned about that aspect of it, which as I am as well. So,
and just to tag on to that, and I'm sorry, I know you'll get to it, but just help us, educate us as we go forward. What are the hot buttons for the team? What are they looking for? When they get that, what are they going to be looking at? Answers for?
Yeah, so codes are huge. For academies, the way it's very structured and stringent in terms of the type of funds and how the ones that are coming into the academy, as well as the way those funds are spent and how those are coded. So there are throughout the year uploads to TEA for PEIMS reporting and things of that nature that that is also pertains to the coding. So that's the biggest thing. There is a certain note disclosures and things of that nature that they expect that are required. And so, but the primary thing, because they can compare it very easily, a TA is very data driven and you can easily compare what's reported versus what they already know. So there'd be red flags immediately.
Okay.
Absolutely.
Continue with the presentation here.
Absolutely. So I do like to always give a little bit of an overview of the audit process just to give you some information in terms of how and why we do what we do. So one, the audit is performed in accordance with generally accepted auditing standards. And when we do the audit, we break it down into 5 phases. So the first phase is the assessment phase. So that's when we come out and we're looking at pretty much any area where money is going in, money going out. What are the controls and the processes in those areas? So we sit down, we do walkthroughs on walk us through how this aspect of it works, and then we do sample testing over that area to ensure what we're seeing in terms of the controls, any potential risks, and how those are mitigated. We're seeing those in practice through our sample testing to ensure that we're seeing a full picture and that what's done in practice is also in line with the policies and procedures. Once we've done that, we move into the risk-based approach. So what that means is every aspect of the financials has a different level of risk and types of risks. So some of the things within the school, such as the types of revenues, the types of expenditures, the coding of those, payroll is a big area for the academy. Some of the way that those disbursements are done and the types of accruals. We look at those as higher risk areas for potential issues, and those types of risks and the type of risks that we see in those financials will drive the type of procedures we're going to do, the level of detail procedures we're going to do over each of those areas. And after that, we do our compliance testing. So things such as Public Fund Investment Act, any data requirements, grants, anything like that, where there are compliance requirements for the academy. We are looking at those to see, is the academy in compliance with those? We read all board meeting minutes to determine if anything comes up that there may be new requirements for the academy. We verify whether or not the academy is in compliance with those as well. Then we move into the actual field work. So at the end of the year, when we get those final numbers, we tie down the balance sheet, perform cutoff testing to ensure everything that should be included in the fiscal year under audit has been. And as we're doing that, we're also confirming with third party wherever possible. So we're tying out items through the granting agencies, through TE, confirming with bank balances, all those things. And as we tie out that balance sheet and ensure that that's materially accurate, we're also tying out and ensuring that the revenues and expenditures are materially accurate as well. Once we've done that, it goes through multiple layers of review and to ensure that all procedures performed were appropriate and complete, and that the reports are accurate and complete with requirements. Fair what we have for you today. Within the audit report, there's the components are the introductory section, followed by the financial section. So within that, you got your auditor's opinion letter, management's discussion and analysis. That's going to give you some year-over-year comparison for the financials, budget information, some high points for the financials. Behind that's your actual financial statements. So that's going to include your government-wide statements, which are your full accrual statements, as well as your fund level statements. As the Academy does operate at a modified accrual basis for fund accounting. Behind that, your notes to the financial statements. So that's going to contain a lot of detail pertaining to those financial statements, so you have a little bit more information of what those numbers consist of. And then behind that, your supplementary information, such as your budget to actual and other required reporting for TEA. As it pertains to the auditor's opinion, there are 4 opinion types that we as auditors are able to provide. Is unmodified, qualified, disclaimed, and adverse opinion. We are issuing an unmodified opinion, often referred to as a clean opinion. That's the highest level of assurance that we as auditors are able to provide. With the audit report are also a few communication letters, and there, one is the communication with those charged with governance. That goes over our responsibility as the auditors, management's responsibility. And then there's other few key factors I always like to point out from that letter. The audit was conducted in compliance with all ethics requirements regarding independence. There no fraud, irregularities, or illegal acts were noted. We encountered no difficulty when working with management, other than the timing. But outside of that, perfect people to work with. And then there were no uncorrected misstatements discovered as a result of our audit.
I just want to ask two questions on this slide. The first one, the communication with those charged with governance, other than board members. I'm assuming you got responses from all board members. First part, but second part, who else did you send questionnaires to?
So that's the questionnaire is something that is considered as part of that. But we collect questionnaires from the board, which I think I'm getting a couple of them today. And then I have management questionnaires as well.
Okay.
So those in management and those on the board are those who we have.
And that's on the municipal and the school side.
There are two separate questionnaires. So you would you should have already received one for the town as well, but it is a separate questionnaire.
Okay. And
so I'm sorry, David. So I've got copies of those. I know we had sent them out via email. So those who have not signed them, you have, like you mentioned, one for the board, one for the municipal side as well. So if y'all want to grab the ones for the BOT role, that would be great. I've got copies of the
You mentioned also here uncorrected misstatements, but you did flag material misstatements in the audit. Can you just talk about those?
There were no material misstatements.
Okay, there was an exhibit here which had reclassification entries, and I think they were alluded to as material misstatements in the draft I read.
Yeah, I'm sorry. Yeah, so there were the note on this slide is that there's no uncorrected.
Right. I understand, but can you just talk about the nature of the misstatements and then how was that spotted? How was it adjusted? Who found those? And what was the nature of those misstatements?
Sure. So when it comes to the correction was for a receivable at year end. The receivable is correct, but when you're looking at governmental accounting, that there is a requirement on the timing of that collection of the receivable. So if it's received 60 days beyond year end, it's considered it is considered a deferred revenue and not. And so at the full accrual side, if you're looking at the statement of net position, you're going to see that receivable there, and you're not going to see a deferred revenue. At the fund level, it's required to have a deferred revenue because of the timing. So there's not a question as to whether it is received or receivable, but it has to be deferred due to timing. And so in our tie out and testing the cutoff and the timing of the receipt of that receivable, it was determined that was beyond that point. And so it was a necessary adjustment. So all other adjustments, there were a couple other adjustments in that exhibit that were provided provided directly from the academy to us, as I identified before, and a couple of reclassing items as well, just for reporting purposes.
But on the accounts receivable side, does that relate to things that were in place as of the end of the fiscal period, but had since changed prior to the issuance of the financial statements, or is it unrelated to subsequent disclosures?
Repeat that again. I'm sorry.
So under GASB, if there's a change from the year end, but it occurs prior to the issuance of the financial statements, is that a subsequent event?
No, because we would, if there was an issue in terms of the collectability of it, we could also allow for that receivable. So it's not a question as to, has it?
This was just not booked correctly in the first place, is what you're saying.
The receivable was, but there wasn't an offsetting deferred amount.
Okay.
So it was just to incorporate that. The receivable was correct and all the revenues are correct. But because of that timing issue, on the fund level, it does change your revenue because it pulls it out of revenue and moves it to your balance sheet as a deferred revenue.
Okay.
So that was the change.
Okay, so it just reduced the revenue number.
That's right.
Okay.
At the fund level, yes.
And was this picked up by the auditors?
Yeah, yes.
All right, but in terms of other potential misstatements, nothing material or otherwise of concern?
No, very clean, actually. Very clean. To continue on, communication regarding internal controls, that's the other letter. So we did not identify any internal control issues. Timing obviously is a factor that we consider, but not an internal control per se due to personnel changes and things of that nature. So there were no internal control items noted.
So help me. I'm going to apologize in advance. Help me understand. We're ever far posting entries to get correct financials. Help me understand that control, how we missed that, how that someone wasn't on fire. I don't know how many months it's been going on. Help me understand that.
Sure. The way it was evaluated was it wasn't that they were like the day-to-day stuff was being booked. It's all those true-up type or correcting entries, those accrual type entries at the end of the year. Timing may have been a factor on the timing of getting the bank reconciliation done as well. I know there was some system issues related to the bank reconciliation. There was one item that was having to get ironed out, communication with the system. However, other than that, the day-to-day type of transactions, those were all being booked timely and accurately. And it was purely a manpower situation, which I guess you could argue that's an internal control issue. We didn't identify it as such because it wasn't that.
That's fine. I just want to make sure y'all saw it. Right? So,
absolutely.
Things like the bank account reconciliation. So we have good controls, good procedures around reconciliations, aged items, all that stuff.
Yes, sir. I mean, obviously, time is a factor, but outside of that, the controls around that reconciliation process very detailed. I think if you looked at it, there's a lot of detail. Marlene is she's a stickler to the details, I think, and so there's a note on practically every item and every bank reconciliation that I looked at. So from that standpoint, I think things are great. Obviously, as we've said, there's a timing issue.
I got it. I understand.
But beyond that,
I just want to ask a follow-up question to Kim, talking about just reconciling bank statements. You mentioned earlier that as auditor, your duty also relates to compliance testing. And I think, you had mentioned about investment practices, for example. So did you look at the nature of where cash is being held, whether it's being properly diversified, whether it's obtaining sufficient yield, whether there's sufficient insurance protection, et cetera, et cetera?
Sure. So we do look at that. We don't really generally comment on the management's decision on where they choose to, how they choose to diversify, as long as we know it is collateralized. So we do test to ensure, are those funds collateralized? It's very common for a large portion of the majority of the funds to be held in one institution, and to make sure that those funds are collateralized. And
what would
protected.
they be collateralized by?
Different financing instruments that they get with the bank, and they.
But are you talking purely about FDIC, or are you talking specifically?
It's beyond the FDIC amount. Okay. So the FDIC covers $250,000, and then beyond that, you would have to collateralize any other portion to ensure it's protected in case anything were to happen.
So we had about $1.5 million, I think, roughly at the academy during the year. So beyond FDIC coverage, was the cash sufficiently collateralized?
It is, and it's actually a note within the report as well.
Okay.
I did note that the amount held in the tax pool, tax pool or Techstar, that it was pretty minimal amount. It's you'll see a lot of cities that and towns and municipalities will diversify that some. I think in talking with management, with the bank, there's been like a matched amount on the interest to ensure that there's not a loss that they're seeing from that perspective. But as far as the diversification, is generally not a lot of diversification.
Well, let me ask more bluntly. I mean, from an auditing perspective, do you feel that we are in compliance with the Public Funds Investment Act?
Yes. So there's a few. There's a checklist for that the PFIA requirements. So we go through that to ensure some of the big things are: is there a policy? Is it adopted annually? Are there quarterly investment reports that are? And each of those things have to have certain wording in those.
Well, so on the quarterly investment reports, I'm not sure we see them. What's the obligation there, to create them or to disseminate them?
So we have copies of those, and as I understood them to be presented to council. But so the way that it's broken down in the guidance and the requirements for PFIA is that they're supposed to be done at a minimum quarterly. There's certain language that needs to be in those, that also that they're provided to council or the board quarterly. So, and that usually there's like a delay in terms of like from whatever your quarter end is. Usually it's within a month after, to kind of depending on the timing of those meetings they're scheduled. But generally, you should get those quarterly as well.
Okay. And is the academy allowed to commingle its funds with the town? I think there's a reference here that it held, I think, maximum balance about $1.5 million against $42 million, 43 the town. I mean, it's not clear how those were split out, but can they commingle?
So the funds themselves are accounted for and separate, completely separately.
Right.
This is the town of Westlake and Westlake Academy. It's a unique setup. There is a shared partnership there in terms of that collateralization and making sure that that's covered. And so, as far as I can tell, there's no issues with that because
Okay.
it is covered. It is covering both, and it's not covering the town and then the academy is just piggybacking off the town. It's that they're covering both.
Okay.
All right. All right. To continue, I just want to give you a few financial highlights. So, the expenditures for 2022 a total of $11.6 million. That is a $1.8 million or 18% increase from the prior year. A few items that saw the biggest shift year over year. So the instruction costs increased by a little over $1 million or 19%. That's primarily due to it being realigned. It was down the previous year due to a lot of the remote learning from COVID. The instructional and school leadership increased as well, $343,000 or 26%. This is also due to COVID recoveries and the change in the head of school as well. Student support services saw an increase there of $188,000 or 18%. This is due primarily to the extracurricular activities, those kicking back off in 2022 as they were not occurring in the previous year. And then after that is the debt service increase of $106,000, which is 51% increase from the previous year. And that's due to the closeout costs of the previous equipment lease. All other areas for expenditures were relatively consistent year over year.
On the school leadership, I believe finance staff had opined that we needed to account for the increased costs of overlapping. And
because there was
staff itself. Is that me or him? Not me.
Sorry, I can't hear.
Okay. The staff had opined that it needed to be accounted for, and I guess management decided not to do that. On those things, so I guess we had Bryce, our old superintendent, here for 3 more months than we thought, is that what it was? Mm-hmm. And so we incurred another $40,000 or $50,000 in fees in that, and so. Is that something you look at in terms of part of your controls to say, like, hey, you should have planned for this, or is?
No, not really. I mean, everyone can have their own personal opinion on things as they see things occur within the finances and the timing of things, but it can be really hard to predict some of these. I mean, that may have been something that you could have predicted.
We had a recruiting firm that we worked for 6 months.
So,
knew this guy was coming.
Looking at that, I mean, budget amendments, those are good things. Like, anytime I see a budget amendment, I'm like, all right, great. These folks are paying attention regularly to see what's happening, what do we need to look at potentially changing. So from that perspective, That's something that I consider. I mean, there were budget amendments made through at least one during the year.
It was done at the end by us.
So like, when there's personnel changes like that, yeah, I guess that one was a little bit more foreseen, and so it wasn't like a drop of the hat, like, oh, we need to figure something out. So maybe, but it's not something that we generally would comment on from here's the letter, we added that as a comment standpoint.
Sure.
Something to consider, I would say. I think learning, like when you look at your budget and look at your year-to-year comparison, like kind of figure out why it was higher in that area, knowing that for you all to know, like, well, in the future, how can we do something like this?
But we get graded on this by TEA, right? They look at our function codes and say how much is going to teaching, how much is going to management, how much is going. So it's not a small detail. It's
Sure.
becomes a part of our grade to TEA of how effectively we're delivering education.
So do we get graded on variances, the budget?
Yes, there's certain portions, right?
No.
Marlene, don't we get if there's a variance of more than 10%? We have to kind of explain it. Yeah.
Yeah, look, to me, that's easily explained.
No, it is. But it's just overall accounting
Yeah.
and good business practices to do as you go along.
Well, the variance analysis,
Yeah. All right. Sorry, continue on.
Yeah, sure. And this is just a graphic to give you a little year-to-year comparison on the summarized version of expenses. Looking at your revenues for your governmental funds. So governmental funds revenues for 2022 total of $10,532,000, or 5% increase since the prior year. Giving you a little comparison year over year there. Overall up by 5%. A lot of that's due to those changes that we talked about as far as COVID, and then also timing of different a lot of grants were kind of down the previous year, funding because of COVID. So just kind of see 5% is pretty common to see a swing of that nature. Pretty consistent with what we would expect. Nothing out of the ordinary. Then looking at the general fund balance. So the general funds had an overall decrease of $360,000 during the year. The ending balance was $1.7 million. This represents 16.4% of the fiscal year 2022 general fund expense. And why that matters and why we look at that is that a lot of entities will look at how far would you be able to operate into that new year. If you weren't receiving any more funds, like from a general fund standpoint, how far would you be able to go? And if expenses were relatively consistent from the previous year, you'd be able to go about a little over 2 months or so without receiving any. So this is kind of one of the things that they look at as a health indicator. And a lot of people will recommend that you have at least 60 days or 2 months. So you exceed that, so that looks good.
The rule's 45 days, is that correct?
Sorry?
The rule's 45 days, have to make.
Internal policy, it's 45 days. A lot of people will recommend 60.
No, I agree.
Yeah. And then fund balance, your general fund's budget results for the academy. Overall, it was a negative budget variance of $297,000. Your revenues exceeded the budget amount by $154,000. Your expenditures were over by $451,000 in total. So overall, have a net variance, negative budget variance of $297,000.
And do we have a breakdown or an accounting of what those variances were?
Yeah. So there's a look on page of that report. It's in the back section of the report.
Yeah, page 64. Yeah,
65.
no, I meant even more so. Like, what I'm trying to understand is, so the policy, the budgetary information on page 67 talks about how budget approval works. And I think this is something I'm just trying to get my head around. Because it says once a budget is approved, it can only be amended at the object by the staff. Function and fund level must be amended by approval of a majority of the members of the board. I think what I'm trying to get at is what were the variances during the year, and how can we understand what did the board approve in terms of what those approved budget changes were and what were discretionary? You have that information? Yeah, I think that would be really helpful, because did you test that from a systems and controls perspective as to whether all variances were properly approved by the board?
We tested to ensure that the budget is consistent with what's been adopted, and any amendments were consistent with what's adopted.
Okay.
And so once those are adopted, those are numbers we go by. We just ensure that what's being reported is consistent with what the board has approved.
Right. Because I mean, ignoring the net change, obviously, because there's benefits from revenue, the expenditures moved by 4.5%, and I'm just trying to get a feel for what This was a budget that was approved prior to us, and so I'm trying to understand is what was the actual difference between what was approved by the board, what was actually spent, how much of that came back for further approval, and how much wasn't required, and obviously making sure there's no gaps between.
Yeah, but we have the data from the.
You got that information.
Also on the page 12 of the MD&A, you will see several breakdowns, the differences and the variances.
Yeah, but that's more year over year.
Yeah, that's a year to year.
Yeah, and I'm looking more for the budget versus the.
Yeah, I mean, I'm not sure if the previous board adopted a budget based on comparing to the prior year. Like a lot of boards do. Like what happened last year? But last year there was a lot of COVID stuff going on still, and so there would have been certainly some changes.
Well, I just feel like that's probably, in my opinion, critical pieces, because we spend an enormous amount of time. We did this past year approving a budget, and then we kind of let it run in the wild. So this is our only checks and balances audit. But unless we can take the benefit of the audit and go back and reconcile it to the budget, it kind of becomes.
Sure. Yeah, absolutely. Yeah. I know there's plenty of boards and councils that I'll present to that don't care about any of this other than they go straight to the budget to see, well, what does that look like? And so it's obviously a helpful measurement for how do we do compared to what we expected. So like having regular reoccurring like budget to actual comparison, are we in line with what we expect?
Yeah, but that's the ultimate governance question, right? Because you're approving what can be spent, and you're testing whether those guidelines were maintained. It's hard for us without that information to know.
Yeah. With that, if you guys have any other questions,
Questions? Any other questions?
Well done, thank you.
Well, all right. We have to get some missing forms into them before we move on to the next thing. Some people have to sign off on forms for the disclosure piece.
You got the disclosure questionnaires for the BOT, so I've got copies that you guys need to fill out.
Was that not what we returned?
Yeah, some returned and some did not. So if you didn't return it, if you guys could take
there's a second one.
No,
sir.
You're good. You're good.
It's just the folks that didn't get an opportunity to fill them out. I ask that you guys do it tonight.
There was just a couple missing.
Okay. Yeah, we'll just get it done here. So, Amy, is this a motion to approve or a motion to accept? Okay. All right. Can I get a motion to approve Resolution 2301, approving the fiscal year 21-22 annual audit report with Brooks Watson? And first?
I'll make a motion.
Second?
I'll second.
All in favor?
Aye.
Motion carries. All right. Thank you.
Thank you all. Appreciate your time. And I want to just, given the timing of everything, I know that draws a lot into the question, but I will say these folks have been working their tails off to get this stuff for the audit. And so,
Debbie and Marlene, thank you.
Thank you very much.
Thank you so much. All right.
Appreciate it.
That concludes our public portion of the meeting. We have a closed executive session, and we're closing out at 3:24. Thank you very much.